Ladies and gentlemen, good afternoon. My name is Svante Cornell. I'm the director of the Central Asia-Caucasus Institute. I'd like to welcome you to this event, which is a regular occurrence, as many of you know. It's supposed to be on. It's on. To this event, which is a regular occurrence, most of you have been at our previous instances of this wonderful cooperation we have with Mr. Käkhönen and the IMF in presenting especially in Washington, where people focus so much on what we call the globe spinning and the geopolitics, to look at some of the underlying realities of this region, which is the economic development of the region. So today we have the privilege of having you here again to share with us the serious research that you are leading, and probably how many people you have working on this on a continuous basis?
Well, difficult to say because it's direct and indirect. Enough.
But you have enough people that are probably one of the biggest concentrations of people working in a serious capacity on this region. So without further ado, please, Mr. Käkhönen, the floor is yours. And I understand you'll probably like to work from there.
I think there's a microphone here also for me.
Yes, it's actually.
It's on.
It's on. That's how Vikings do things.
Okay, it's always a pleasure for me to be at the Central Asia-Caucasus Institute, and I'm happy to present to you this fall's economic outlook, but also I'm complementing it with some other elements like a discussion of governance in the region. And so the overall theme is to present the economic outlook for the Caucasus and Central Asia region, and then see what the economic challenges are and what kind of solutions we are proposing to address these challenges. The underlying global environment is weaker than just half a year ago. There are trade tensions, geopolitical uncertainties, conflicts, and this is affecting growth globally. We have downgraded growth for the world economy to 3% this year, which is the lowest in a decade. And while we are projecting some increase for next year, we have been disappointed in past years and often ended up downgrading. For the CCA region, it's important to note that all the key trading partners, the Euro area, China and Russia, are seeing downgrades, and this is affecting the CCA region. Now, if we look at growth in this region, we haven't really downgraded it, but this is not necessarily a good sign, and so that's why we are saying here that not that growth has stabilized, which would be the glass being half full, but that growth has stalled, meaning that the glass is half empty. Growth is around 4.5% for the region, a bit higher for the oil importers, a bit lower for oil exporters. We don't see a major improvement into the medium term. And there's variation among countries, Uzbekistan, Turkmenistan, Georgia, seeing the highest growth rates currently, and Azerbaijan the lowest. Now, what has allowed the CCA to maintain growth when growth rates are declining elsewhere? Economic policies are one reason. There has been fiscal stimulus in some countries, in particular in Kazakhstan and Azerbaijan, and this has supported growth. Now, the fiscal stimulus has not necessarily been for economic reasons, but more to appease the population when there has been social unrest, for example, in Kazakhstan. Monetary policy has also been loser in many countries, as shown in the right. Policy rates by central banks have been lowered in most cases. The big change that is taking place is in exports. Export growth was as high as 20% in the previous 2 years. It's now negative this year and next year. And this is putting a pressure on growth. Imports are also slowing, not as dramatically, and as a result, the changes in the current account balances, as shown on the right-hand side, are not as dramatic. But the oil exporters are seeing their current account surplus turning into a small deficit. Now, given this economic situation and outlook, what are the challenges for policymakers in the CCA countries? I would highlight 4. The near-term challenge is to deal with the global uncertainty and downside risks. Oil prices are also always a factor of a source of uncertainty, and on the left-hand side, the black line shows the oil price, the yellow one, oil price volatility. And so there has been a lot of volatility and uncertainty remains. The projections that represent different vintages of our projections are for no increase in oil prices, but fairly stable oil prices. And these are derived from futures markets, not from any independent research. On the right-hand side, we see the challenge regarding exporters in the countries. If we look at the top 10 export destinations for the CCA, these are seeing, these saw a decline last year. There's a bigger decline this year, and also still negative growth in imports for the next 2 years. And so export market growth is not going to be supportive at all for the region. To grow, they need to do something to compensate for that. The second challenge, and this is more fundamental, is that the growth prospects are not so great with current policies for the medium term, in part because the composition of growth, the sources of growth, are moving in the wrong direction. Countries grow basically either because they have more labor that they are using, and that's not happening in the region except for a few countries because population levels are fairly stable. They can then invest at capital, and that can increase growth, and the remaining source of growth is improved total factor productivity. And in the first decade of this century, the countries saw huge productivity increases that were driving growth. This has changed, and especially among oil exporters, this total factor productivity is even negative during this decade. So growth that's happening is largely because of investment, and the more countries invest, the less efficient it becomes and the returns become lower. So countries need to find a way to improve their productivity to be able to sustain growth and hopefully increase it into the medium term. And in that regard, one element will be to improve the business climate. The right-hand side shows what challenges businesses indicate in surveys when doing business in the CCA. And the four biggest ones are access to finance, tax rates and regulations, inflation and corruption. But there are others. The third challenge is not only to raise growth rates, but make growth more inclusive. And this is important both for economic outcomes, but also social peace. And so the benefits of growth should go to all groups of the population and also be more regionally equal. The left-hand side shows an index of inclusiveness, where the red line shows the level in emerging European countries, and we see that in the CCA all countries fall well below the emerging Europe standards. The challenge for higher and inclusive growth is very real. The right-hand panel shows that over the next decade the region has to generate 4 million new jobs to prevent unemployment from increasing. The fourth challenge relates to governance. I mean, the region, with the exception of Georgia, is not known for good governance, and this is also weighing on economic performance. And in a worldwide ranking of governance indicators, the region on average is basically 1/3 from the bottom. So 2/3 of countries in the world have better governance than the CCA. And this applies to various aspects of governance, whether it's rule of law, government effectiveness, control of corruption, and so on. So there are these challenges for policymakers and how to address them. Now, to address the near-term downside risks and uncertain global environment, it's important for countries to build resilience. And this means prudent fiscal policy, prudent monetary policy, and building sound banking systems. On fiscal, prudence in most cases means fiscal consolidation, because debt levels have increased quite significantly over the past 5 or 6 years. But it's not just having prudent fiscal positions, but having policy making done in a more systematic way. And so the fiscal management frameworks can be improved. Two concrete ways are to have fiscal rules and medium-term fiscal frameworks. Many countries, encouragingly, in the region have put in place rules that set upper limits for debt and then stipulate actions if this debt ceiling is under threat. And medium-term fiscal frameworks are important so that decisions are not made ad hoc on an annual basis, but there's a clear medium-term anchor for fiscal policies, and half of the countries are along the way in this regard. Regarding monetary policy, most countries now have exchange rate flexibility, and I would say that the biggest improvement in economic policies in the region over the past 5 years has been a move to more exchange rate flexibility. It wasn't easy initially because companies and households in the countries had expected stable exchange rates and borrowed in foreign currency at lower interest rates, and they then were burned when there was more exchange rate flexibility. But now it's very clear to the countries that letting the exchange rate move is a good way to absorb external shocks. It doesn't mean that there still wouldn't be resistance and that the exchange rates would be fully flexible, but I think countries have made major moves in this direction. And also they are modernizing their monetary policies in the direction of central banks being independent both from fiscal and political pressures, and while staying accountable and making decisions using policy rates and signaling their intentions going forward. And central banks also are very clear in most countries that their objective is to maintain price stability while keeping financial stability rather than something else. And the best way they can support growth is by making sure that there's price stability. Central banks also have started to appreciate the importance of communication, and it's still an art that needs to be mastered in many countries. On the banking sector, the situation has improved in many countries. During the recession that followed the 14-16 economic shocks, several countries, Azerbaijan, Tajikistan, Kazakhstan, had negative growth in credit to the private sector, and it was because of the weak shape of the banking system. Now the credit growth rates have recovered in most countries, but as the right panel shows, all countries still have a significant amount of problem loans, including non-performing loans. On the left-hand side, we see that the growth rates for private sector credit are very high in Uzbekistan. They have been around 50% over the past 2 years. This is not necessarily a good thing, and it reflects the lack of reforms in the banking sector in Uzbekistan, where other reforms have been taken. There's still a lot of directed credit that is given at preferential rates, and it's unlikely that this amount of credit growth is all going to productive purposes. Now then there's the challenge of boosting competitiveness to achieve higher inclusive growth. And there are many aspects of competitiveness. One is whether the exchange rate is at the right level. And in our latest assessments, in 5 countries, the exchange rate is broadly in line with fundamentals. In 3 of them, the currencies are overvalued. Then one can look at various factors and dimensions of competitiveness as on the right-hand side, and comparing with emerging Europe, one can see that the CCA is comparable in some dimensions, but in areas like infrastructure, adoption of ICT, macroeconomic stability, and so on, it falls behind, and also financial systems are weaker. One difference between the oil exporters and importers in the region is evident on the left side here. While oil importers in the region have been able to increase the share of their share of non-commodity exports in global markets, oil exporters have not done well and have seen their market share come down. Export quality is also low in many countries. On the right-hand side, we see that in 4 countries in the region, export quality now is actually lower than in 1995. Some countries have made encouraging progress, though. One area where the region is lacking behind is participation in global value chains. And these networks of trade and investment across countries are typically stronger the more advanced countries are. But in the CCA, the global value chain participation rates are consistently below emerging Asian and European countries. One factor is transportation costs, where on the right we see that it can cost 5 or 6 times more for goods to be transported from some CCA countries to Shanghai and Rotterdam than the same cost than transportation from emerging European countries. Now this difference can come down somewhat through better infrastructure, including through the Belt and Road Initiative, but there should be no illusion that these cost differences would become insignificant, because the fact remains that it's always much more expensive to transport goods by land than by sea. And so to become more competitive, to participate more in global value chains, the CCA countries need to take action in other areas, and this means basically attracting foreign direct investment through a better business climate, better taxation that's seen as fair and predictable, and so on. The countries also, some countries also have very large state sectors, and in some of them the state-owned enterprises still generate as much as half of the output, and employment of the SOEs can be 20–30% of total. And countries also need to provide better incentives for and have easier regulations to allow new companies to be established. On the right-hand side, we see the rate at which new businesses are established annually per 1,000 population, and with the exception of Georgia, the CCA falls far behind. But I was reminded of the pitfalls in these kinds of charts when I was in Tbilisi, and it was pointed out to me that Georgia looks good here because there are some difficulties in closing businesses, and rather than closing companies in a proper way, it's easier to open a new business. And this despite Georgia's generally much better framework. Let me then talk about addressing the 4th challenge that I mentioned, namely improving governance. Now, why does governance matter? And the basic reason is the same as for inclusiveness. I mean, inclusiveness is good not only because it's morally the right thing to do, but because research shows that more equality results in higher growth rates. And similarly, it can be shown that better governance not only increases growth, it increases investment, and the revenue to GDP ratio. And what's shown here gives an indication of what would happen if a country moves up in the global rankings by one quartile. And so if a country, I mean the average CCA country is now 1/3 from the bottom, and if it moves a bit above average, then it can expect 0.5 percentage point higher growth, 2% of GDP more investment, and 5% of GDP more revenue, and obviously very significant benefits. The IMF has over the years covered governance issues in its discussions and reports. We are now doing even more systematically, and we are covering 6 areas, 4 of which are in our core areas, and then 2, namely market regulations and rule of law, are also covered, and we are trying to get expertise from other sources. And we are covering these in reports in a risk-based way, in the sense that the bigger the governance problems, the more prominently we cover these issues. And let me then briefly discuss the 4 areas that are in governance and in the IMF's core expertise. And one is fiscal governance, where we compare CCA standards to those in peer countries, in emerging markets and advanced economies. And in all areas, the CCA falls short, most so in procurement and fiscal transparency. In financial sector oversight, basically financial supervision, the best areas, relatively speaking, are the ones in green. The problematic ones are in red, and there are the biggest weaknesses, and it's in providing financial supervisors independence and resourcing in the supervisors, having assessments of country and transfer risks under control, similarly for interest rate risk, and also a weak area is the ability of financial supervisors to prevent criminal activities. Central bank governance is also an area that we follow, and the area, the CCA performs roughly as other emerging markets, but much below advanced economic levels. And then there's the issue of anti-money laundering and combating the financing of terrorism. This is an important area also because the weaker the standards, the bigger the chance that countries are cut off from correspondent banking relations. And this is a real risk for some CCA countries. And shortfalls in addressing criminal cases, international cooperation, preventive measures are the biggest problem areas here. Let me then finally discuss what the IMF is doing in the region. The best known service we provide is financial programs where countries get financing in return for taking agreed policy measures. We have currently these only in Georgia and Armenia, but we are engaging with all countries intensively and having discussions, providing recommendations, writing reports for all of them. But the largest number of our visits is in terms of providing expertise through technical assistance, and I think overall we have at least a few hundred visits to the whole region per year. The biggest users of our expertise are Georgia, Uzbekistan, and Kyrgyzstan, and we share expertise in the fiscal, monetary policy areas, banking, statistics. We also have training, and the new development for us is that in a year's time we are opening a regional technical assistance center in Almaty. It covers both the CCA and Mongolia, and we'll have there experts who will have local knowledge and who will travel from country to country, responding to the needs of each country. We also do a lot of research, and the recent highlights are shown here, but we always try to make sure that we focus our research not on issues of purely academic interest, but on what matters for the economic policy needs of the countries. And so the recent work can be listed under themes of promoting inclusive growth and bolstering resilience, and all the work is available on the IMF website. This is pretty much what I have to say today. The key points are that growth in the region is now stalling, and this reflects also a very weak external environment, which is creating downside risks. And to address these risks, countries can have prudent macroeconomic policies, and they need to build also sounder banking systems. But for growth to be higher and more inclusive in the medium term, countries need to become more competitive and improve their governance. And the IMF is a strong partner of the region, and we are helping and even strengthening our engagement in any way we can. So thank you very much.
Would you like to go
Yeah,
over here?
so we can share that.
Absolutely. Well, thank you very much for this. It draws to mind, I think, 3 or 4 years ago, when at one of your presentations you had a quite chilling presentation, I would say, when I think it was right after the collapse of the oil price, where you predicted that the slump that the region has come into is not a short-term story, and it's going to be for a number of years that we're going to see this. And clearly, I think what you said then not only turned out to be correct, but we are not seeing the end of the tunnel yet. What I would like to ask you is that on a superficial level, it would seem that a lot of the policymakers across the region have understood that they need to do something. So we see this, if you compare the rhetoric of governments, at least in perhaps half of the region's countries, there's a lot of talk about reform. We see it in Uzbekistan, obviously, most dramatically. The Institute, of course, published a book about that, where we noted that these are largely statements of intent, not yet implemented. Kazakhstan, of course, has for an even longer time been emphasizing different visions of Kazakhstan 2030, 2050, and all of these many steps to improve the country. Lately, we've seen Azerbaijan joining this reform mania, if you will. And obviously in Armenia, after the revolution there, we see the same thing. And that leads me to the question that none of this really seems to be reflected in what you've told us. Is that because they are doing good things that maybe will be reflected maybe in 4 or 5 years' time when you're hopefully coming back for this? Or is it because these are nice words and maybe they're genuinely intending to do something, but that they're just not able to implement any of these intended reforms?
That's a good question. Certainly all is not gloom and doom in the region, and many good things are happening. So certainly Uzbekistan has been reforming, and there has been increased trade with the neighbors, and certainly a country like Kazakhstan will feel the pressure from Uzbekistan. Hopefully that will have spillovers. Also, Kazakhstan is a country in the region that has the clearest vision, not only for the medium term, but 2050. And Johannes Lind was part of the team that was helping to build the strategy. And Georgia, its governance standards are fairly high. And also on the positive side, for many countries in the world, growth in the 4 to 5% range is not bad at all. So certainly they could do worse. But in the high oil price era, the region grew at twice that rate. And as I indicated, the need for job creation and a more inclusive growth are high, so they need to do better. It's not easy for the region to have fundamental transformations. I mean, in 2013, we had in Bishkek a conference marking 20 years of transition, and one of the things that was done there was to read what Stan Fisher had said at the similar conference 10 years before, and all of that was still perfectly valid. So it has been known for at least 2 decades what needs to be done. The issue is the implementation, and some things have been done, but I think it's the political economy and governance issues that are preventing a fundamental breakthrough. And also there are structural issues in the region. It's one of the most isolated in terms of being connected, and unlike Eastern Europe, it doesn't have a natural anchor. I mean, Eastern Europe had the EU as a goal. It's less clear what this region has. So it's facing challenges that some other regions are not facing, and it's still growing at a decent pace, but can do much better.
And the landlocked character that was very striking.
Yeah.
Well, who would like to be the first in the audience to move the discussion in a different direction? Or maybe the same? Johannes, please.
Okay.
Do we have another microphone? Yes, it's coming right here.
Thank you. So thank you very much, Juha. It's always great to be updated as you guys pull the information together and give us new insights. Thank you. A couple of quick questions. So at one point you flagged that investment has been sort of the driver of growth rather than productivity, etc. Can you tell a bit more about the nature of that investment? Is it infrastructure? Is it BRI? Is it private, public? What's behind it? I mean, in principle, investment might be better than consumption from a sort of long-term growth perspective. So if it's the right kind of investment, I wouldn't be too worried. But I wonder whether you could say more about that. The other question is 2 countries that one obviously is focused on in the past. Uzbekistan, you said a little bit about its changes, but could you tell us a bit more? Because that's obviously the biggest paradigm shift that's happened, and for the longer term it could be really quite dramatic if Uzbekistan were to sustain reforms and push in the right direction. The other country that I'd be interested in, you flagged the issues of banking sector concerns in Tajikistan. So 2 years ago we forcefully predicted that the banking sector would collapse in Tajikistan. I don't think it's happened. So what actually did happen? Could you say just a few words? I mean, I know the numbers still look pretty bad in terms of non-performing, but our sort of collective Cassandra cries, I think our credibility by, crying wolf too often is a bit of a problem. So how do you look at this now? Thank you.
Can I just say that I think this is something in Washington that people don't do a lot, the tendency among us think tankers is to make bold predictions and then to ignore whenever, we've turned out to be wrong. So I think we should appreciate where you're coming from in this.
Yeah. So on investment, I think a lot of that has been very useful investment in infrastructure, largely public, and so that's very good, and it's BRI related and other investment. In some countries, it was not fully. I mean, there was wasteful investment, and I think in Azerbaijan and Turkmenistan, I think Turkmenistan had 40 or 50% of GDP investment ratios, and this has come down significantly. And so it's clear there were some excesses, but even if most of the investment currently is productive and it's good, I'm just saying that if we don't see the productivity improvement from them, and we haven't seen them, then you can't just keep on investing because the returns on investment become lower. So it's time now, so hopefully next year or the year after we can show that there's some good dividend from these investments. On Uzbekistan, they are extremely keen to reform, at least the president, the institutions like the central bank and the Ministry of Finance. There's probably resistance in other areas and maybe at lower levels, but they are getting help from donors, international financial institutions, and want to move probably too fast for their own good. The first wave of reforms has been mostly done, foreign exchange liberalization, prices are being liberalized, and so on. But some difficult reforms remain, and currently they are moving to reforming the banking system and state-owned enterprises, and this pretty much needs to be done simultaneously because the state-owned enterprises are the recipients of these subsidized and directed loans, and they are not facing hard budget constraints. But banks need to become operators under commercial principles, and so it's an extremely challenging task, and of course there are lots of vested interests at play. So that's a big next test for them. Then there are many structural reforms, like in agriculture. I mean, as in many countries, there's no private land, but then the leases can be very restrictive. I mean, in some cases 1 year. I mean, there are stories of farmers who have cows, and they are saying that they can't slaughter the cows at the optimal time, but have to keep them alive and feed them well past their prime, because the inspectors come only at one time of the year, and if they can't show activity, they will not get a renewal of their lease. So lots of inefficiencies in the system. I mean, they started 20 years after many of the other CCA countries. They are trying to catch up in a year or two. It will not happen, but hopefully this momentum continues. Now, Tajikistan, I think, Johannes, your recollection is a bit wrong, because we had a discussion on this, and you asked a good question 2 years ago, why, if we have a country where the two biggest banks are bankrupt and non-performing loans are 2/3 of the total, we don't see a real banking crisis, why people are not on the streets, and there's no deposit run and so on. And I think what we thought then was that in part is of course the strong security apparatus that prevents public unrest, but also the banking sector is so small. I mean, maybe 1/6 or 20% of the population have banking deposits. So it's not something that would be of the same scale as in more developed countries. Now, what has happened is that these two former largest banks are not operational, so there's no activity in them, but they haven't been resolved, meaning that depositors are still owned whatever is left from the banks, and credit is not moving from other banks that much either. So it's a pretty dead banking system, and certainly not one that is contributing fully to the real sector.
Thank you. Yes, sir.
Hi, I'm Bill Beal, President Emeritus of the Asia-Caucasus Business Association. Earlier this year, CCA made a statement that we're not going to bail out banks anymore. And I've noticed on your chart that the non-performing loans seem to look a little bit better in Kazakhstan. Am I wrong, and is there any correlation between any of this? I mean, is this incentivizing people to clean up their acts? And anyway, I appreciate your comment.
So I think the chart reflects past actions that include huge bailouts by the government and even the central bank, which shouldn't be in that business. And so the banks more or less have the capital they need to operate effectively, if they can operate effectively. The issue is that the business models of the bank haven't been reformed. I mean, they got into trouble because they didn't have the right kind of business model. They didn't, that there was related party lending, and excessive risks were taken, and they have gotten used to being bailed out. Now, there have been efforts to change the pattern. The central bank has more powers now to handle the banks, and importantly also there's an asset quality review done by independent experts underway. And so the idea is to get a clear picture of the true situation of the banks. The expectation is that it again will show capital needs, and then one would hope that the owners of the banks would contribute more to the capital than in the past, but if not, some bailout could be expected. But the real issue is, are the banks going to change their ways so that they would not get into similar trouble before, as before?
Since Mike ended up in my hands.
Strangely.
Yeah. So on Uzbekistan, we did our analysis. We completed our work sometime in March of 2018, and already then there were some most important reforms already happened by then. And at that point, we were talking about privatization of large-scale enterprise and banking reform being the priority. More than 1 year and a half passed since that. I remember, I think it was June or July, they adopted some kind of, decree or some regulation that's supposed to start the process. So where this thing stands at this point, is it progressing, or is it somehow stalled in the system somehow?
Yeah, it's progressing, but it's a huge issue, and so it needs to be done properly. And as I mentioned, there are governance issues. I mean, vested interests. Clearly, state enterprises have powerful connections, and it's not easy to.
My question is more about, have they selected any model of how they are going to privatize those enterprises, or is still not clear?
I think it's still under consideration, and I think it's good that they are not rushing, because you don't want privatization to the wrong hands. That would not improve the operation of the companies. And
Brilliant.
ideally, you would, you would want much more foreign direct investment, and you need competition in the economy. And I would say that, with the exception of a few sectors, foreign investors are still waiting. There are lots of visits by companies to Tashkent and lots of interest, but most still want to see whether the reforms are there to stay, to get in the big way. But there's huge potential in Uzbekistan, and if foreign investors come in a major way, that can transform things. There's also huge potential in areas like tourism. Some of the best sites in the world in Samarkand, Bukhara, and so on, and still Georgia, whose population is 1/10 of Uzbekistan's, gets more tourists per year than Uzbekistan. So clearly they have a lot of potential, but it needs to be tapped.
Okay.
Wayne Grady from American Foreign Policy Council, the mothership, I suppose, CACI. All of these countries in different degrees depend on their economic interrelationships with their larger regional neighbors. And several of those regional neighbors are now under very extensive sanctions regimes from the United States, which can have secondary impacts on other countries. And I'm wondering if you're noticing any such impacts in any or these countries from either of these sanctions regimes, particularly on Iran and on Russia. It might be difficult to document, but do you have at least a sense, anecdotal or from things that you hear from people in the region, that there's any kind of a secondary impact in their economies?
Yeah. In the case of Russia sanctions, there's a very clear impact on practically all the countries in the region, and it's a bit difficult to separate that from the general weakness of the Russian economy, but the connections between the Russian economy and the regional economies are huge. Part it's through oil prices and so on, but if you look at growth in the region and oil prices, which also affect the Russian economy, there's a very close correlation. Now, the sanctions have weakened the Russian economy further, and that's certainly a big factor why trade has been affected with Russia, and also the remittances are lower than they would be otherwise. The impact of the Iran sanctions is more limited to a few countries that have had closer economic ties. But the Russia sanctions certainly are major, and it's not just the direct impact of sanctions, but the uncertainty created.
Could I follow up on that? The Eurasian Economic Union has been very much an issue that governments have been forced to deal with. Most recently, we've seen a very public debate in Uzbekistan about the pros and cons of joining that. Is that something you've been able to follow, or are you able to? I'm sure some governments may be asking you whether this is a good idea or a bad one. Do you have any analysis on this?
Yeah, these are political decisions. Clearly, there are pros and cons, these are both customs unions and then broader economic unions, in that they're supposed to be free labor movement. Now, any customs union has the advantage that there would be more trade within the tariff-free area, but then given that the common external tariff is very high, there will be less trade with others. And in the current environment where growth in Russia is weak, the net effect is less positive than otherwise. Now, for the European Economic Union, I mean the free labor movement, to the extent it's implemented properly, is a good thing, and one can see that in the case of Kyrgyzstan, which is in the Union and has seen a healthy recovery in remittances compared to Tajikistan, where the remittances remain still somewhat depressed. Then there's the issue of common standards in various areas, and it's good if they achieve the common standards at the level of the best performer, not the weaker performers. And I think that's the ambition. And then I mean, we see various countries that there are glitches in the implementation, but so that there can be positives there.
Thank you. Further, Pastor Courtney.
Thank you, Bill Courtney from RAND. Perhaps one of the unifying aspects of Central Asian countries in Azerbaijan is where they're located in the Transparency International Corruption Perceptions Index, where they've been a reasonably stable place for quite some time. Another is looking at the former Soviet Union as a whole. Privatization of state-owned enterprises has generally made not much progress. So Russia, Ukraine, good examples, Kazakhstan, others. And there's some correlation, presumably, between corruption and state-owned enterprise. Is this an area, is this a chain, if you will, that can be broken through IMF, World Bank advice, or is this going to require such profound governance changes that go well beyond what IFIs can do to help the countries?
Yeah, I mean, IFIs can't do it alone, but in our areas of expertise, we can make progress. I mean, what I see as our approach is working with the institutions we deal with and improving their governance, and hopefully this will have spillovers elsewhere. In most countries, the central banks and in some cases ministries of finance are the best run institutions, and so the hope is that if we make them follow the best standards, that they will show a good example and also serve as ambassadors for good governance more broadly. But I think it really needs to start at the top for countries to be able to make fundamental changes, and I think the Uzbekistan experiment, I mean, where there was a major regime change and there's a reform momentum, is an opportunity to see this. It's not a coincidence that in Uzbekistan this difficult issue of governance was fairly easy to discuss. I mean, as you can understand, some countries don't welcome a very open discussion with us on various aspects of governance, including rule of law. But in a country like Uzbekistan, where they can blame the previous regime for the governance problems, the discussion was much more open and constructive.
Although they are the same people very often.
Yeah.
Yes, sir.
Stanley Covert. Recently, the IMF published a report said that 43% of low-income countries are either at high risk of falling into debt distress or are already in distress. Presumably, that would include several of these countries. Now, we talk about China frequently with Belt and Road, but China also seems to be experiencing debt distress. Seems like every day now when I look up something, I'm looking at CACI today. Another state-owned commodities trader can't guarantee payment on a $500 million bond amid what it calls a debt crisis in China. So that's my question. If you have a debt crisis in China, does that spread and put the debt of these other countries at risk?
Yeah. I think every country in the world would suffer if there's a debt crisis in China, because the Chinese economy would grow much more slowly, and that would slow the world economy, and there would be spillovers. Even if countries don't have much of a trade or debt relation with China, but so it's an issue for the world economy at large. Now, this region does have two low-income countries, Kyrgyzstan, Tajikistan. Tajikistan's debt sustainability is under threat already in the current situation. But the debt ratios that I showed for the region as such don't look particularly high, I mean, especially for oil exporters and even for oil importers. I mean, in the 40 to 60% range, they don't look high compared to ratios more than 100% in advanced countries, but the debt carrying capacity of these countries is not very high, and so these kinds of ratios are already problematic, and as I mentioned, Tajikistan probably will have most difficulty paying back its debt.
Further? Johannes, why don't you go first?
Yeah, Johannes Lin again, by the way, I can introduce myself from Brookings and a few other places. So you mentioned before that Central Asia-Caucasus don't have sort of the European locomotive to pull them forward, upward, whatever. Now Russia, I guess, especially under sanctions and oil prices being relatively low, isn't going to be that kind of locomotive. What about China, though? I mean, do you see and China is the big elephant and or big panda, whatever. So, and it's close now. The connections aren't necessarily all that great, and of course, boundaries within the region are still pretty thick. So, trying to connect with China isn't all that easy necessarily if you're in Turkmenistan and Azerbaijan. But still, isn't China going to be, assuming it doesn't collapse as somebody just thought it might, and let's hope it won't in many ways. But is China going to be that locomotive? And shouldn't it and couldn't it be? And what do you see as opportunities and risks there? And is that something you analyze, actually?
I mean, China has been the locomotive in the past 10 years, and there was a tenfold increase in the region's trade with China during that period. So it has been a huge factor. Now, I think that there are risks in the Chinese economy, probably cannot continue growing very fast forever. There are issues regarding borrowing from China, opportunities and risks, and I think the data that we have in the official statistics doesn't tell the full picture, and I don't think the Chinese know the full picture necessarily, because the lending is from different sources, and there are many different operators, SOEs, line ministries, and so on. But just the sheer size of the Chinese economy and the proximity to the region will keep it an important player. But I think countries in the region would do well to try to be as open in all directions. I mean, it's not an easy neighborhood because of the distances and the various regional powers, and so why close any doors? I think they need to find a way to stand out, and so the better economic policies they have, and that includes liberal trade in all directions, welcoming for indirect investment and so on. this would give them the best chance to succeed, no matter how the risks in various places of the world play out.
Thank you. Oh, go ahead.
The Astana International Financial Center, or I guess Nursultan International Financial Center. There have been controversies in Kazakhstan about this. In the legal community, for example, there's been controversy about whether it's better to try to improve the Kazakhstani legal system versus importing an English system, and how, for example, judgments in the financial center might be enforced in the ordinary Kazakhstan legal system. Elsewhere, there have been some questions about, is the financial center in Astana needed? Almaty already is a small but significant financial center. What's your assessment of the financial center and its potential, and are there risks of abuse? For example, companies being forced to use that center, they may not want to, or banks.
Yeah, I think there are potential benefits, but the best thing for Kazakhstan would be to reform its domestic banking system, and that would be the best way to help the economy. And in that regard, a big test to me would be when major international banks return to Kazakhstan, and that hasn't happened yet. So the Astana International Financial Center cannot be a substitute for the much needed reform of the domestic banking system. And also, conversely, if the domestic banking system is operating at high international standards, then it will have synergy with the Astana International Financial Center. Now, one benefit I see from the Astana International Financial Center is that they have some ancillary activities. They are training local accountants and other professionals, and I think that's a good spillover, and to me that could be in the end a bigger benefit than what were thought to be the major operations of the center itself.
Yes. First of all, thank you again for coming to us and sharing your knowledge. And I meant to say that earlier, but now I'm saying it now. So, one of the charts had the three top countries in terms of GDP growth. It was Georgia, Armenia, and Turkmenistan. I know that. No.
Turkmenistan, Uzbekistan, and Georgia.
So Armenia is not in that.
Well, it would probably be next.
Okay. My question was, first of all, you just revisited, I think, methodology of GDP calculation for Georgia. And so, can you say a few words? Sort of, is it a standard sort of approach? Is it more closer to what is reality now than before? And that was the reason for why you did it. Number one, and number two is that because figures look better now than before. And second question is about Armenia. So we know that some reforms are taking place there as well. Where you see this trend going, and we heard, I don't know how true is that, but that next year Armenia may bypass Georgia and Azerbaijan in terms of GDP per capita. I don't know what your outlook for that is, but so we are just interested if you can share a few words about Armenian economy.
So Georgia, the government, not the IMF, just revised the GDP numbers, and this happens in many countries. When they have a better way of capture additional elements of the economy, it happens, and typically it shows a higher GDP, and then it makes the various ratios, including debt ratios, look better. Now, it doesn't really change the reality, because these activities were in the economy before, and it's just that now they are captured in statistics. So it doesn't mean that there's now, say, more money in the budget to use or something else, but it's probably a more correct picture of the economy.
So Georgia can borrow more. That's ideal.
Well, I don't think it will have much of an impact even in that regard. On Armenia, the new government clearly has as one priority to improve governance, and it's taking some actions in that regard, and the program they have with us is going quite well. Armenia this year is growing quite rapidly, but it's not necessarily, I mean, it's in part because of one-off factors, and I think the growth rates going forward are going to be very similar to Georgia, so I think they'll compete in the same league for some time to come.
Thank you. We probably have time for one last question. Anybody who has not been part of the discussion would like to intervene? Or somebody else? Bill, you'll have the last word. No, you will. The last question.
Living standards seems to have become a significant factor throughout the former Soviet Union. The decline in Russia was 15% or something. Static living standards in Ukraine seem to play a role in the Zelensky election. In Armenia, sometimes you hear the question about how long the honeymoon will last, and this is sometimes framed in the context of living standards. I don't know about Uzbekistan, what will happen there, but do you have a sense of whether some of the sort of contemporaneous unrest that we're seeing around the former Soviet Union, Russia, Kazakhstan, Ukraine, Armenia, Azerbaijan, is living standards becoming a more important issue relative to maybe other factors in determining both economic outcomes and political outcomes?
I think what matters is not just the level of the living standards, and of course the more, the happier the people should be, but it's also the issue of inclusiveness. I mean, do people feel that they are getting their fair share of any economic growth? And to the extent they don't feel getting a fair share, that increase the chances for unrest. And so it's one reason why countries in the CCA should be interested in having more inclusive growth. Several countries in the region, certainly Georgia and Uzbekistan, are very explicit that they want more inclusive growth, and they have statements, and their economic programs are built on that concept. So I think it's understood, and but the issue is about the implementation.
Thank you very much for sharing these projections and these analyses with us. I think it gives us an important tool in all of our other work regarding this region. We don't always hear about these deep, and I think it also explains many of the, I guess you could call it anxiety that you see among a lot of the leaders in the region, the urgency with which they are trying to engage in, or at least promulgate certain types of reform. I guess the question really is whether they know how to achieve the results or not. Many of them are trying, but it seems that they're facing both legacy issues from the way their political economy, as you mentioned, is structured, to geographic issues, and to the fact that by definition they are affected by what's happening in the larger great powers surrounding them, but they can't really do much to affect those great powers in turn. And I think that's a constant reality of this region, it seems to me. Well, we hope that you will be back again, perhaps with even better news in 6 months or so. In the meantime, Mamuka, is it on December 5?
2:30.
December 5 at 2:30, we will have our next and probably last event of the season, barring any major developments, which is going to be on the analysis that we are putting out on the European Union's strategy in Central Asia and how that has evolved in the past 20 years. We hope to see you there and at other events at the Central Asia-Caucasus Institute. In the meantime, thank you again for coming, and thank you for this fruitful discussion. We hope to see you soon.